Today we will be talking about how to trade breakouts using Bollinger Bands and RSI. Now this will be a little bit different when we are trading breakouts using only price action, support, resistance. Now when we add hint of what to say, add a masala of Bollinger Band and RSI to the breakouts that we trade, the probability goes up. The trading probability, or maybe the success of getting the breakout more into our favors, goes up. So we'll today see how we can use this Bollinger Band and RSI together, uh, with to trade breakout into a more probable way. What is breakout? Basically, breakout is prices moving outside a defined support and resistance level. Now, when we are defining breakout, we have to understand what is a defined support and resistance level. So I have made it bold so that when we move forward, we'll talk about these things into greater depth. So, moving outside a defined support and resistance level with increased volume, these are the first requirement of a breakout. Second, once the trade starts to move beyond the price barrier, the volatility tends to increase with momentum supporting the breakout direction. Now, it's not important. It's not only important for the price to break out in a single direction, right? Beyond a support or a resistance level, we need the push of volatility as well as a momentum push to support this breakout. So if there is a breakout and we don't see volatility expanding and we don't see momentum supporting that breakout, that there are high chances that the breakout will fail. So the reason such breakouts are such important trading strategy is because these are setups where starting point of future volatility increase large swings. And because see, if you break out, what it basically means that breakout are initial points of a big trend to start, right? So whenever we see a breakout or breakdown, we must assume that a good trend is going to begin from those levels. So it is very important that that breakout is supported by volatility, momentum, and of course there is a defined range, defined support and resistance uh, that's broken out. So biggest challenge that we face while we trade breakouts is that there are too many false breakouts. So if you have been trading for a couple of years, you must have come across this challenge that these type of breakouts, maximum breakouts, will trap you. They will be false breakouts, and maximum many breakouts are also not decisive as the market may enter into another consolidation zone. So there are two things that generally happens. First is the breakout tends to fail, and second is after the breakout, the price does not move in the expected range or expected speed, and it consolidates again. So these are the two challenges, and today we will try to take care of how we can come across these two challenges. So this is the first thing, right? So there was this defined resistance zone, and the price, see this candle, there was a big candle with huge volumes. This was followed by a breakout, then again it fell into the range. So this was a failed breakout basically. So this is what we face in everyday situation, I suppose. And again, see, this was again a good range, good resistance level, and there was this push. After this big candle, there was a push up again above the range, and then again it fell into this breakout zone. So this is what we will face often in the market if we are not mixing this breakout with momentum and volatility. So we'll just discuss how you can use these things. So from the previous slide, we have understood four terms: support and resistance, momentum, and volatility. So when we add volatility and momentum factor with the price breakout, the false breakout can be ruled out to a greater extent. So it can be ruled out to a greater extent, but I won't say that it will be a 100% sure type of thing. But again, uh, you will be very happy to trade breakouts with momentum and volatility confirmation. They will fail less. So what are support and resistance? So just a type of overview. I'm just trying to give you an overview that supports are levels where downtrend is expected to pause due to concentration of demand or buying interest. Similarly, resistance are the zone where we face the selling pressure. So it is an area or a zone basically where prices come and takes when we are into a downfall, when we are into a downtrend, the prices will come and stall at a place for some time. It will spend time there, so it will be a support area. And similarly, when the prices are rising continuously and it goes and stalls at a place, the prices are not rising anymore. It is moved into a consolidation zone, that is a resistance zone. So see, basically this uptrend, we had this uptrend, and then there was this downfall, and at this level, the prices stalled, right? It didn't fell further. So this was a support zone at this point. So you can see that price has spent a good, amount of time here. This is a monthly type time frame, so you can understand that if there is one candle here or two candle here, there are more than 50 days of trading. Similarly, if you are looking at this point again, see there are 4 5 candles here. We are talking about the monthly time frame, so there was a huge type of build up at this place. And so this is an important zone for any price action. So the price came and exactly stalled at this level. So this is an important support level, and we have to take care of the support level. Any trading method you are using, whether you are using a breakout method, whether you are using a trend following method, any trading method you are using, this understanding of support and resistance is the most important thing, right? So these are the basic things that we generally miss out. And uh, and then we find out that it is quite important to, you cannot discount support and resistance zone. So similarly, this is Tata Consultancy Services. This is the weekly chart, and you can see that how well these levels have acted as resistance, right? So once, twice, three, four, five, 6 times they have acted as resistance. So this is an important zone where where buying halts. Every time you move into this zone, the buying is stopped, right? The buying ceases and the price goes into consolidation, and then maybe a breakdown or something else. But again, this is important zone, and we have to understand that this zone is important, and we have to give due respect to these type of zones. So these are support and resistance definition that we are looking to. So first condition to trade breakout properly is that when breakout happens, it is very important for the price to move out of a support or resistance area. So whenever we are talking about a breakout, suppose we are talking about a breakout on the upside, it is very important for the price to move above the area, right? It is quite important for the price to move above the area. Similarly, when we are talking about a price breakdown or a breakout on the downside, we need the prices need to break down or close below this area. So it is very important. This is the first condition that we have to look at. The second thing is that we are looking at is volatility. Now, when we speak of volatility, it is not in context of the VIX or the option volatility. It is based on the volatility of the stock, right? So we will use Bollinger bands for this filtering volatility. And Bollinger bands were developed and copyrighted by John Bollinger, still around, and it was designed to discover the opportunities that give investor a higher probability of properly identifying when an asset is overbought and oversold. So this is how he developed, and this is how when the Bollinger bands were developed, he had this thought in mind that he will use Bollinger bands to to figure out overbought and oversold conditions. So a small type of introduction that how the Bollinger band is made. It is set of 3 bands, and they are plotted. They are plotted 2 standard deviation away from the 20 period simple moving average. So any standard technical analysis software will have Bollinger band. And so why 2SD? Now what happens that when we are talking about 2 standard deviation will contain 95% of the price action. So when prices are moving within the Bollinger band, within the 2 standard deviation, it will contain 95% of the price action. When it moves, now this is important. Why volatility? While we are talking about volatility, we are not concerned about this 95% time. We are concerned about an outlier event when the prices break out of the band. So when 95% of the times the price will be inside the band, so only 5% of the times the price will be outside the band, or rather, no, uh, there is 99% probability when we are using it as a 3 standard deviation band, but 5% probability is there that the price will be outside the 2 standard deviation band. It will be an outlier event. Now this is a bell curve and it applies on everything, right? So it applies on our trading account also, that the 5% of our trades will be super trades, 95% of our trades will be okay trades, right? And similarly it applies on all type of traders also, right? So 100% of the traders try to trade, 95% fail, and only type of 5% are successful. So we want to be in this 5%, right? So we are also, so that's why we are concerned about only this 5% thing, right? Outlier events. So we will be looking at the events where the prices are closing beyond the 2 standard deviation band. So relating to this standard bell curve, it is between that, as I have explained you, that 95% of the time the data will be inside the band. Now when it moves outside the band, it is an outlier event, right? That means something special has occurred. So when breakout occurs, there is something special that has occurred, right? You can correlate with it. When a stock breaks out of a range, either there is some great fundamental change, either there is some news based push, or either there is some new anything, some new management, new product launch, or there is an event that has occurred which will change the characteristics, or which will change the whole character of the stock, or which will change the whole character of the uh, financial instrument that we are talking about. So it is an outlier event. It won't happen every day, or it won't happen, every week. It will happen once in a while. So we are looking for this outlier event only. So the prices are within the band. They are 95% of the time they are within the band, right? So when they are outside the band, there is something special happening that is against the normal, right? So it was inside this band and it was constantly making higher highs and higher lows. It was moving in an uptrend, and then this COVID mess came along and we saw this correction. So this was an outlier event. The virus thing was an outlier event, right? So that's why it pushed the prices outside the band. So similarly, we are looking for these type of outlier events. When a breakout happens, we have to confirm it with this type of event. Now, condition two, the first condition was that it should come out of the this support and resistance zone. Secondly, it should be moving from a contraction zone to an expansion zone. Breakout should be an outlier event. As I told you, this is the contraction zone, and it should be breaking away from a contraction zone to an expansion zone. So bands should be expanding when breakout is taking place. Now, momentum, and momentum trading technique is which a trader will buy or sell according to the strength of the recent price trends. Now, it is important again. We have to look when we are talking about breakout, when we are thinking to trade breakouts, there should be a recent type of strength or recent momentum in the price change. Like, so momentum is determined by the factors like trading volumes and rate of price change. So rate of price change, trading volume, these are determined when these are the things that will determine the momentum thing. So RSI is one of the best tools to measure momentum. So RSI is one of my favorite tools, and I am using it inside out every day on trading charts to take my trades. And this is only the tool which I have spent my time with. I have spent more or less 8 to 10 years with RSI. I have done research on it, and it was published in IFTA. And this is one of the best tool when we come to measure momentum. And if you ask, if there is a poll that you run, that how many traders around the world use RSI, so this will be around. You will see that 80 to 90% traders are using RSI. But again, uh, it comes to the fact that how you are using RSI correctly, you are using that depends on your success thing. So we will utilize the range rules. I'll just explain you what the range rules are when it comes to breakout. So what is RSI? Basically, it is such a wonderful tool, or it is such a wonderful event, such a wonderful type of indicator. What it does, it is comparing the magnitude of recent gains to the recent loss, right? So it it measures that during the last 14 days, right? How many up closes have we got, or how many down closes have we got, right? So in an uptrend, so when we are talking about an uptrend, just think that when uptrend comes to our mind, what we are expecting higher closes, right? And when downtrend comes to our mind, what we are expecting lower closes. So RSI will use this method, or this same concept. It will use the higher closes and lower closes concept to calculate the momentum. So this is the formula, and I'll just go through the next slide to explain you how it makes the calculation, and it utilizes the closing price. Now this is very important. It will utilize the closing price. It does not consider the high, low, or open. Basically, see if what why closing price is important, because it is the place where every emotion settles, right? If you are a day trader, right, you will trade the high lows, but during the close you will be out of your position. Our M2M, our trading account, all depends on this closing price, right? So it is very important. Rest all is MSA chaos, right? Open, high, low, what the price does during the day does not, count when we are talking about serious trading. So even when we talk about the Dow theory, that is the base of technical analysis, that was developed on closing price. When we talk about the Elliott wave theory, that was developed on the closing price. So it's very important, price action, the closing price, and we will use the 14 days, that is the standard RSI. So if we recall the formula, this was the formula. It was average gain and average loss. And what is the importance of average gain and average loss? So let us see that now this is the 14 days. I have taken the 14 days period, and these are the closes. So first on the day zero, suppose the close was 100, and on the next day it made a gain of 1 rupee when it closed at 101. Now on the next day, again on day two, the prices fell from 101 to 99 and made, so there was a loss of 2 rupee. So this thing continued to happen during the last 14 days, and then we had this average gain of last 14 days and average loss of last 14 days. So this is a calculation table. Again, uh, for that same security, what will happen? Same, from 100 to 300, 103, 3 rupees gain, then there was a loss of 1 rupee, and then again there was a gain of 0.5, and then we have this average gains and average losses. And again we have a third table. Again you can see that there is a change in the average gain and average losses in every case, right? On the first table, on the second table, and this is the third table, where again we are closing 1 rupee greater, we have this gain, then 2 rupees loss, and again 2 rupees loss, then again 2 rupees profit. So this is how the average gains are calculated. So this is the average gain and average loss. Now we put this into a table, and when we are considering, when if you remember the first type of table, and what happened in the first table, that on period 0 the price were at 100 rupees, and on 14 period, right, on the 14th day, on the 14th day the price is 101, and this was 100 rupees. So how much did the price change? 1.5%. This was the average gain, this was the average loss, and this was the ratio of average gain and average loss. And when we put this thing into the RSI, the RSI value is 53.49. Now you see what happened. The price change was 1.5%. Average gain by average loss is 114.98%, and RSI is at 53.49. Now on the second table, the period 0 was 100, and on the 14th day the price was 104. The price changes 4%. The average gain was this, average loss was this. Now average gain was average loss by one was 157%. Now just try to understand that though the price has increased 4%, the momentum has increased 157% times. Now this is very important to understand that why RSI is such a beautiful indicator, right? So the price changed by 4%, but the momentum changed by 150%. And here, similarly, the price changed by 1.5%, but the momentum changed by 114%. And in the third case, there was a loss of 3%, and the momentum fell by 31%. Right? So RSI was, showing the reading of 36. Now, see what happened. RSI above 60 implies bullish momentum. That's why when RSI moves above 60, right, it will imply a bullish momentum. 157% of time, you may say 150% time momentum have increased when it moves above 60. And when it moves below 40, you may see a momentum loss, right? Or a momentum has increased on the lower side. So this is the importance and this is the beauty of RSI. When we talk about RSI moving above 60 or when we talk about RSI going below 40. So this is why this 60-40 range is an important range. Now, when RSI reading is above 60, prices have registered more up closes than down closes. Now, this is the whole summary that you have to understand. That when RSI is above 60, the prices have registered more up closes than down closes. That means the prices are into uptrend, and also during this uptrend, we are registering up closes. That means the momentum, the speed is with the price. Similarly, when RSI reading is below 40, we are experiencing more down closes. That means the momentum on the downside is more stronger. So when we are trading breakouts, it's become important that the prices have been building momentum prior and during breakout. So that's why it is very important to take RSI into consideration when we are trying to trade breakouts. Now, condition 3, breakout should be followed by a momentum surge. Now, what is momentum surge? Now, this, when we are trying to trade a breakout on the upside, the RSI should be moving above 60. This is the when we are trading about when we are talking about breakout on the upside, the RSI should be above 60. So this is how you have to combine these three things. Now, what we have uh, talked about was we have talked about the support and resistance thing, that the price should break a support and resistance level when we are trying to talk about type breakout. Secondly, the Bollinger bands should be expanding, right? There should be a volatility expansion. And thirdly, the RSI should move above 60 when we are trading breakout on the upside, and RSI should be below 40 when we are trying to trade breakout on the downside. So see at these levels, if we are trying to trade this breakout on the downside, the RSI has moved below 40 also. So this is the type of thing we have to combine with. Now, why it is important, why volatility and momentum is important. Now, see, this is the I'm using all latest type of charts so that it becomes easy for you to relate. So this was the breakout here. You can see that this was a good resistance zone, right? And there was this breakout, and it fell into this zone again. Why? Because we had an breakout above the Bollinger bands, we had an breakout above this resistance zone, but the RSI was not supporting the breakout. It wasn't able to clear the 60 zone, and it stuck there and it came down again. So this is what, and this is why when we are talking about momentum, we have to talk about volatility, we have to talk about breakout, everything. We have to talk about these three things together when we are looking for a successful breakout. So now one more thing, if you are trading breakout, if the trend is already in a place, right, when we have already a trend in place, the breakouts will be more successful. So what happens here, we had a trend, then there was this consolidation, we had this support and resistance zone, and then see this when the candle started to break out above this consolidation, the band started to expand, the RSI started to break above 60, and then this was the move. Now, if uh, you can trail this move, or you can trail your positions using this middle band, that is the 20 period band. Once the prices comes and close below this band, you can exit your positions, or you can trail using any methods that you're using. Right? There is no hard and fast rule. You can use a 10 period moving average, you can use a 9 period moving average, you can use the ATR, anything you want to trail your stops. So this is how a perfect breakout should look like. There should be a trend in place, then there is a consolidation, and then there is a breakout. So this is what you should be looking for in the breakout. Breakout is supported by RSI. That is, we have this momentum surge, we have this volatility expansion. Everything is there when this breakout is taking place. I can see at this juncture. So this was an hourly chart, and I'll show you on every time frame. Right, this is valid on any time frame and every time frame. Same settings are valid on anything. Right. So this is Larsen Turbo 30 minutes charts. So this, we have this consolidation zone, right? And then there is this band expansion, and the prices start to move above the consolidation zone. They start to move above the band. Now this is, as I told you, that prices should move above the band. So the breakout is an outlier event, right? So there are, see what this thing does when you are applying the bands. It will break out only 5% of the time above the band. So this will be a very type of what to say, a confirmed type of breakout. I shouldn't use the word confirmed, but again a breakout with a high probability. So the band start to expand. See, the volatility start to expand. The RSI moves above 60, and this is a strong breakout that we can expect. And when you can book the profits, you can book the profits either when the prices close below the 20 period moving average, or you can even book the profit when the prices leave the band. So after this candle, the prices are leaving the band, right? They are no more walking on the band, so you can book the profits here as well. So you can use anything. See, technical analysis is a very flexible science. You can use anything provided you know it in a good way. So again, this is an example of Adani transmission. This is the daily chart. So we have looked at an hourly chart, we have looked at a 30-minute chart, we are looking at a daily chart. Similarly, see, there is a defined resistance zone, and they were defined support zone, and then the prices start to tag on the upper band, but the resistance zone is intact. So we are not going to jump early. We have to wait for this resistance to be broken. And once this resistance is given away, we see the bands are still expanding, prices are walking on the band, and we have this RSI also above 60. So this is the perfect case to go long at this point, right? So this is how you can really use RSI. And now this is the daily chart. See, this band was in, the prices was in tight range, right? Number of times we have touched the support lines, number of times we have touched the resistance line, and the band was also very flat. Now one more thing I just want to tell you, maybe out of the context, but when to use which indicator is the main thing, or the main important thing that we most traders miss, right? So when to use the Bollinger band, when to use the moving averages, when to use the price action, when to use the RSI, or when to use the stochastic is very important to understand, right? So if you ask me that, when you are doing a support and resistance type of trading, right, when you are selling at resistance, buying at support, at those times the Bollinger band comes very handy, right? So because it is a very dynamic type of support and resistance and overbought and oversold zone, right? So at this point you can do your support and resistance trading, but real fun comes here when it breaks this support zone. The RSI moves below the 40 area, and the bands started to expand, and then you can really go in for the trading thing, right? And one more thing, if you have noticed that during this sideways zone, or during this consolidation zone, the bands are flat, and the RSI is in a zone, that is the 60-40 zone. The RSI doesn't move above 60, nor it moves below 40. So this is a zone which also RSI creates for itself when we are into a consolidation zone. Again, see, this is a Bajaj holding an investment one day, and I've tried to incorporate all the latest charts, and we'll see some stocks that are almost either they have given a breakout or they are ready for a breakout. We'll see as we move forward. So, see, this was again. I did not, as I incorporated the daily charts or the latest charts, the type of this down move was very difficult to uh, incorporate. So I just focused more on the upside breakouts. So this was a resistance zone. This was the gap, and you can put anything and everything you want, right? The main focus is to trade the breakouts in the right way. So this was the resistance zone. The prices closed above the band. The band started to expand. The RSI was above 60, and then the prices moved up. Again, the retest of the resistance zone, and you can use anything, right? Change of polarity and whatsoever, whatever you want. Again, this is the Iker Motor charts. You can see very good consolidation zone. The bands are almost flat. The RSI is between 60 and 40, right? And then we had this breakout, and then the price moved up. Now, see at these levels, though the RSI went below 40. Now, this understand this thing. Though the RSI went below the 40 levels, though the price closed below the bands, but we had this support levels, right? The support level didn't give up. The support level was intact. So this was not a valid trade on the downside. So we have to wait till all the three conditions are met. That's very important. Right? We cannot jump our guns. It's very important that all the three conditions are met. Again, see this cement daily chart. We have this cup and handle type of formation, whatever you call it. Then there was this breakout, and the bands were also expanding, but was the RSI above 60? No, it was below 60. It was between 60-40 levels. So this breakout didn't succeed, right? So again, at these levels, what happened? The band expanded. The bands expanded. The price was above the resistance zone, and we had the support of RSI also. This was a very good type of signature move that we are looking at. So these are the type of breakouts that you should really follow and you should really look at. This Wipro daily chart again. You can see this. This was a descending triangle. You can now mix up your classical charting, anything with it. This is the descending triangle. Now, when we had this breakout, the RSI was below type of 60, 40 levels, and then it moved down. Then again, we had this accumulation wedge or cup and saucer or anything. And then when there was this breakout, the uh, price expanded, the band expanded, and RSI was above 60. Now, this was a very good type of movement that we can find when we are trading. Again, this is US dollar. See, it works on anything and everything which has the capacity to break out. This is the daily chart. This was the resistance zone. RSI was into 60 zones, and when it broke out, RSI moved above 60. The band started to expand. Lot of example. Now, how to find out stocks? Now, when you are looking for stocks, you have to look for stocks that are in consolidation. Now, the greater the consolidation, the bigger the consolidation, the better it is, right? Because when it is into a consolidation zone, it is gathering lots of energy, right? And the impact of breakout will be even greater. So the when you're looking into a consolidation area, the Bollinger Band should be flat, during that consolidation, and it should be expanding while breakout. Now this is what you have to look for, and RSI should be between 60-40 range after spending time below 40 in case of bullish breakout. Now what I just wanted to explain here is that when we're looking for a bullish breakout, if RSI is below 40 levels and then it comes to the 60-40 zone and then it makes a breakout below 40, comes into the 60-40 range during consolidation, below 40 comes into the 60-40 range, and then there is a breakout. So there is a higher probability of charts registering a very higher amount of breakouts. So let us look at some of the examples in the current market. First is the Engineers India. So this is the current chart you can see, and we have just registered a breakout here. The bands are expanding. The candle is above the upper band. The The RSI was below 40 prior to breakout. During consolidation, the RSI went into the 60-40 zones, and at the time of breakout, the RSI is above 60. So this is the stock that you can keep in your watch list for the coming days to see how it behaves. And then we have this Infosys. We had this good breakout during the last day. We had this was a very good resistance zone, and then RSI prior to this consolidation was below the 40 levels. During consolidation, it went between 60-40, and then there was this its breakout. It is above 60. The bands are expanding. Now you can again keep this stock in your watch list. Now gold futures again, it is at a very what to say, good place to trade in. Right, see the consolidation here. The RSI was below 40 before the consolidation. It went into a 60-40 zone when it was into consolidation, and now it is trying to register a breakout here, and the RSI is above 60. Now just we want this band thing to confirm. Now the prices to start coming out of the band, and this will be a very good breakout to trade. So this is again, now there are some stocks that are awaiting breakout. First is Bank Nifty. You can see this resistance zone. This is very intact, and we tried to break out at this level. Now see, this is a very important and very interesting case, right? We tried to break out here, right? And you may say, you may ask me that this was a valid breakout, right? During the intraday, we broke out, and this was candle. At this candle, we broke out. RSI was above 60. Everything was in place. You're missing something, right? Tell me what. Just try to look at the chart. You're missing the bands expansion. The bands are not expanding. If it were a valid breakout, the band would have expanded on the upside and on the downside. So this is how you have to put everything in harmony to trade this. It's a very easy setup, but when you look at it, right, when you go to the bottom of it, right, you will understand that no, it is very difficult to follow easy things. Now this is how, and this is the irony, but we have to accept it, right? If I show you complex algos here and complex markings on the waves, right, and I mean, if I show you some RSI studied with moving averages or everything, you would be very fascinated, right? So that this guy is doing really something very great. But if I show you so much easy things, right? So again, it is very easy to make money, but it is very difficult to follow, to keep following those easy things to make money, right? So this is how you should see Larsen Turbo daily. Again, it is awaiting breakout, right? The bands have started to expand, and it moved up above the resistance zone. The RSI is just at 60. We have to see how the RSI will behave once we start to move above the band, and then we can call it a good breakout. So this was it, guys, for today. I hope that you have enjoyed the session, uh, you know as much as I have enjoyed delivering it. And